Now on the side, I'm looking for questions. I like to answer the questions as I get them. Which one do I click there?
Give me
Click
one.
to open question panel. I got it.
Yeah,
I
got it?
got it.
Okay,
I'm good to go. Thank you.
great.
Okay. My name is Dale Brethauer. Today, what I'm going to be talking about is the importance of the exit. And Andrew before me was talking about you got to have a target. I think it's more important sometimes to know what your exit strategy is versus the entry. I've read some books that have been written by some very powerful traders, and some have even claimed that they can be profitable entering at any time, but having an exit strategy. And that's what I'm going to be teaching you today. And what I use as an exit target are the Fibonacci extensions. I've been trading for 30 plus years. I'm a hedge fund manager. Again, my name is Dale Brethauer. Take a breath, hold it for an hour. I'm the CEO of Options Infinity. We have what I believe is the best education stock option trading website available today, www.optionsinfinity.com. And towards the end of the presentation, I have an offer for you. Our website, to be a member of the website, is totally free. We believe our motto is to make the free content better than others' paid content. Then if you want to go ahead and get into a pro membership, which is very reasonable, it takes you to the next level. But I want to teach you everything that I know. I want to teach you my strategies. And we give this away for free right on the website. I want you to know me. I want you to know the strategies. I want you to see what we have available before you invest. And the investment is minimal. And I'll talk about that at the very end, so stay tuned. Okay, today in this webinar, you're going to learn when to exit. I'm going to be talking about using measured moves. Measured moves can tell you when a trend is trading. Excuse me, when a trend is changing. Now, once I have a measured move, I can put on a Fibonacci extension. And when I have that Fibonacci extension, I know that when it gets to the 161, 261, it's overextended. Okay, question AB equals CD. I'm going to be going over that when I do the measured moves. It's very good, very good. I'm going to show you how you can use this at any time frame. I'm going to show you some trading examples, some actual trades. I'm going to be showing you my trading record. And then we'll summarize by taking a quick look at the website and give you my offer. Okay, most stock market literature focuses on the trade entry. But like I said in the beginning, I believe that exiting the trade is what defines your success. Exiting the trade is what defines your success. The obvious quote is cut your losses short and let your profits run, and that is fine. What the heck does that mean? Cut your losses short and let your profits run. Sure, sure. That's like buying low and selling high. How do you do that? How do you do that? Well, one of the things to cut your losses short, you use stop losses. I particularly don't. I have a mental stop, at which point I know I need to go out. And I put in an alert on my charts, and I'm alerted via text or right through the computer. But I let my profits run until the Fibonacci's tell me when they are overextended. And that's a great place to take your profits. Not before. Let it work. Okay, just as an example, I'm going to take three very common exit strategies. One is the moving average convergence divergence crossover, the MACD crossover. Then some people use a trailing stop, any number of days, and other people use a moving average when it goes below the moving average. Common or 20-day. A lot of people look at the 50, 100, 200. So what I'm going to show you on this next chart is a chart of Johnson & Johnson. And you can see that right down here, it came up, it pulled back, and it made a higher high right here. That is a measured move. I'm going to be talking about that a little bit in a couple slides coming up. But that's a measured move. Once you have that measured move, you know that the trend has changed, and this is now a bullish trend until you get something that moves to the downside. Now, let's look at the three things. If we entered down here, we entered on October 5th of last year at 94.25. First of all, this is the MACD. This is the daily MACD. You can see it crossed over right about here, right about in this region. Then you look at a 5-day trailing stop, and that occurred right here. Okay, and then you look at a 20-day moving average line breakthrough, and that occurred right here. So you can see that those, using that information as exit strategies, works, and it's good to have something like that. It's better than nothing. Okay, based on the MACD crossover, you would have got out at 100.48, and that was a 6% gain. Not bad, not bad for a gain in the stock. Excuse me. I trade options, and I trade options that are in the money about 60 days out, and I'm looking for leverage of about 6 to 10x what we can get in the stock. So if you're looking at a 6% gain in the stock, you're looking at a possible 60 to 100% gain in an option. Not bad. Trailing stop was 6.4%, moving average 5.9. All those are okay, and it's good to have at least some strategy. Exit based on the Fibonacci extension on December 15th took it to 103.64. It doubled what you could have gotten on some common exit strategies. It doubled that, and basically what you're doing is you're allowing the stock to move, and you're allowing it to move in the direction that you want it to. But when it gets to a Fibonacci extension, you know that it's overextended, and that is the time to take your profits. You can use the Fibonacci extensions to take profits on the upswing, like I just showed you on Johnson & Johnson, or the downswing. Let's look at the measured moves. The definition of trend in an uptrend is higher highs, higher lows. And if you see the stock coming up here from A to B, and then it pulls back from B to C, and then it comes up here and makes a higher high right here, that completes a bullish measured move. Okay, you had it move from A to B, then it pulled back, then it started back up again. This now is a higher low. Then when it crosses this point here, it has made a higher high. That's the definition of an uptrend. Once I have that measured move, I can place a Fibonacci extension. I use Thinkorswim. I'm not associated with them in any way, but Thinkorswim is very easy. It's just one button, and you basically take the cursor and you drag it from A to B, B to C, and it automatically puts the Fibonacci extension on the chart for you. Let's talk a little bit about Fibonacci's. Fibonacci's are everywhere. And the reason why I love Fibonacci's is because they're seen throughout nature. Fibonacci's is a real mathematical way of determining fear and greed in the marketplace. But Fibonacci's, when you look at a flower and you go up the stem of a flower, the leaves grow at a proportional distance of the ratio. The spirals on seashells are in a proportion to the ratio. The distance of the human forearm to the hand is proportional to the ratio. The ratio is 0.61. 0.61. Not only is the forearm to the hand 0.61, every major bone in your body related to the larger bone, the tibia of the femur, is 0.61. This is not just mathematics or hocus pocus. This is real stuff, okay? My hand is 7.5 inches. My forearm is 12.3. If I divide 7.5 by 12.3, it gives me 0.61, which is called the golden Fibonacci ratio. I could go on and on. And if you go on the internet and look up Fibonacci ratios, you're going to see a lot of examples and a lot more information. So doesn't it make perfect sense that the market would move in perfect harmony with nature? I mean, what moves the market? Humans, fear, greed, and that all can be mathematically calculated. The golden ratio is 0.618, and it's derived from a number sequence where you add the current number to the previous number to get the next number in the sequence. Okay, let's start out with 0, 1. Add those together, you get 1. Now you add 1 plus 1, you get 2. 1 plus 2, you get 3. 2 plus 3, you get 5, and so on and so forth. Now, at any time with any one of these numbers, you can take the previous number divided by the next number. In this case, I took 55 divided by 89, and it comes out with 0.618, and that is the root Fibonacci ratio. Okay, now mathematicians have taken this number sequence that was developed by Fibonacci and the Fibonacci ratio and have used this by taking the square root of that and the square of it, and then they go a little bit further and look at the reciprocals of those, and you can see they come up with the 1.618, 2.618, which are the ones that I use to show me when the move has fully extended. And I'll show you some examples where the 1.272 comes into play. One of the things I look for when it gets to one of these Fibonacci ratios, I know two things could happen. One, it's going to consolidate at that point. Or two, it's going to turn around. Okay, so when it gets to that point, you know it's going to consolidate or turn around. If it blows through one of those extensions, there's a very high probability that it's going to go to the very next one. If it blows through the 1.27, very high probability it'll go to the 1.618. Same thing if it goes to the 1.618, it's going to go to the 2.618. Okay? Any questions on this so far? I don't see any questions coming through. All right, I'll continue on. I hope you're getting this, but you know it's all recorded. So this is a chart of Nike. Okay, Wayne, thank you. Wayne says, no question here, you're explaining it well. That's great, that's great. This is a chart of Nike, and you can see that Nike was having a downturn here in August of last year. It came up, it pulled back, and then it made a higher high. That is a measured move, either here or here. At that point in time, once it makes the measured move, I can put on a Fibonacci extension, and I got the 127 right here. So I kind of knew in advance what my target for exit might be. Okay? Now, as the trade goes on, you might get additional measured moves. And when you get additional measured moves, every time you do that, you can put on another Fibonacci. Here's one here. It went from down here, up here, down, and the measured move occurred right here. Putting on the Fibonacci extension by just dragging up and down, there's the 127, here's the 161. Well, let's take a look at these now. 127, what do we say? 127, it's either going to blow through it, and if it does, it's going to go to the 161, or it's going to consolidate a little bit, or it's going to reverse, okay? You can see this was a consolidation period when another measured move was made, and up it goes. Now, as I have a number of measured moves, I start looking at clusters of Fibonacci's. There was the 127 of the very first one. Here's the 261 of the second one, and here's the 127 of the third one. I have a pretty good idea that when it gets around this level, I want to take my profits and run. Well, let's see what happened. All right, and that's what you want to do. Every time you see a measured move, you put it on another Fibonacci extension. Mine is set to automatically come up with the 127, the 161, and the 261. I know that when it gets to those points, it's either going to consolidate, pull back, or blow right through it. When I get a clustering of measured moves at a certain point, and I see it get to that point, I will take my profits. And that's how you let your profits run. That's how you let your profits run. A couple examples. This is an exit trade on GDX, the gold miner ETF. You can see that the measured move was made right up here, came down, held, and there's a big measured move right here. I like the bigger measured moves. The bigger measured moves give me a better sense for what's going to happen. You could have done a measured move right here and guaranteed the 261 probably would have been down somewhere around here. At that point in time, you say, well, okay, I could have gotten out there, and if you see another measured move in the same direction, you get back in. You get back in. Now, unfortunately, here on GDX, on the weekly, on the ETF, this big move happened overnight. But let's see, let's go from here to here. There's the 161, blew right through there, came back up and tested it. Bingo, 261 the very next day. 261 the very next day. And that was 136% profit in 2 days. Okay, like I mentioned, the Fibonacci extensions may be used on any time frame, any market, in any movement, up or down. They are very flexible, and there are no indicators out there today that are forward-looking indicators. The Fibonacci's are. The Fibonacci's give you an idea of where to target that exit. I know nobody has tomorrow's newspaper, but the Fibonacci extensions help you to target as if you had tomorrow's newspaper. I'm going to take a look at a Verizon on a weekly chart, a Forex on the daily, a 1-hour chart on silver, and a 5-minute chart on the FASS ETF. Here you go on Verizon. You can see that the measured move was made right here, came up to the 100, pushed right through the 127 and the 161, consolidated here for a little bit, finally pushed to the 261. Allow your trade to work. Allow it to work. Is it okay to say, hey, I got out here? Absolutely. Absolutely. When you see another measured move, you can get back in. That's no problem. You don't have to stay all the way to the 261, because as you go down here, the 127, I think the statistics are very close to 85% of the time it makes a measured move, it'll go to the 127. Then it drops off to like 75% for the 161 and like 50% for the 261. So taking profit in this region is not a bad idea. Not a bad idea. Here's a Forex on. You can see how it came up here to the very low one, consolidated and pushed up, but finally pushed to the 261 before it dropped like a rock. Here's the hourly chart on silver. This is a very nice measured move that was made here. There's the 161, blew right through that, 261, came down. The more you do these, the more you will not be, you'll be mesmerized by it, and you'll be astonished. It's like, how do people, what's going on? The brakes are being applied. The brakes are being applied. This is fear and greed. Fear and greed, as predicted by the Fibonacci number sequence and the ratios and the extensions. And then here's the FAS 3X bullish. You can see how this one was I believe this one was done on, I can't remember. I think this was an unemployment report. Came out here, made a measured move, and before the day was done, I exited because it had hit the 161, and that had gone from 55.3. Actually, when it went past here, it was 56 and came all the way down here to 53. That's a big move. That's a big move in a matter of hours, and that's what you can do. That's what you can do with the Fibonacci's anytime. Okay, a couple examples of some actual trades in my portfolio. Here's a Motorola trade that we just recently got out of for 164% return. A theta trade, and this was an iron condor we had on the RUT. A weekly trade on unemployment, 375% return on that one, and a stock trade on McDonald's that was a 21% return. Remember, a 21% return of the stock is about a 200% return on an option that's in the money about 30 to 60 days out. Let's take a look at those trades. And you'll see that this is pretty easy to do. I like to keep it simple. My trading is very simple. Okay, measured move. Comes down to the 161, consolidates a little bit, makes another measured move, blows through the 261, comes down to the 127, puts a halt on it, off it goes. Off it goes. Learn these, learn to use them. You can't beat them. You just can't beat them. This was an iron condor that I put on the RUT right here. And what I saw was a measured move back here, and that it had come up to the 100%. And my Fibonacci said, okay, there's the 127, there's the 161. At the 127, I'm probably going to consolidate a little bit, and then it's going to be off to the races. So when at some point in time, I want to get out of that. This was an iron condor that didn't move at all for 15 days and we profited 12%, that's based on the margin requirement, and that's 120%. This is the unemployment report. This is the unemployment report. And you can see that this guy happened the day before. You got a measured move the day before, knowing that the unemployment report's going to be put on at 8:30. Right around 3:30 that night, you could put on a call, and bam, there it is. It busted through overnight the 261, and that's going way up to the 432. What do you think I did as soon as I saw this? I was out. I was chomping at the bit to, come on, market, open up so I can get out of that. Let me take my profit and move on. And this last one is just Mickey D's. Once again, a measured move. It all revolves around the measured move. And this came up to the 161, and it kind of hovered right there. I got out right here. Why did I wait a little bit? Well, one of the other tools that I use is the regression channel. This is like the casing of a sausage, and all the prices contained within the casing of the sausage. Statistics say that this is the plus or minus 1 standard deviation. 66% of all prices will be contained within that. 95% of all prices will be contained within this. A lot of people talk about you can't trade overbought, oversold. I use it all the time. All the time. Yeah, occasionally you'll get an outlier, but you can't beat the regression channel along with the Fibonacci extensions. 2014, I did a double up challenge, and I took a $25,000 portfolio, and my objective was to double it by the end of the year. You can see by the end of the year, I had increased that by 151%. Now you say, well, that's 150. First of all, money managers would give their eye teeth that year to do 11%. I did 51.4 based on $1,000 per trade in a $25,000 portfolio. The other thing of importance is that we never had a losing month. The S&P 500 had 3 that year. 2015 was just as good, not quite as good. I think I came up with 96%. Okay, how do you learn more? How do you learn more? And this is my offer. Every night on www.optionsinfinity.com, I do a nightly video blog. A nightly video blog that talks about what I see for the next day, what I'm doing for the next day. Now, I follow a very small portfolio of financially strong stocks, and the website will show you how that's chosen. Everything I do is fully explained on the website under the free membership. Tonight, if you go onto the website and go and sign up for a pro membership, which will give you access to the nightly video blog, which is like looking over my shoulder and watching me trade, is only $49 a month. You can cancel at any time. Using this promo code, it's going to be $24 for the first 30 days. Okay, let me just show you the website. And let me talk a little bit about that. This is the dashboard for the pro membership, but the free membership is exactly the same. You'll see that anybody can watch my strategy tour. Anybody can come in here and watch what I'm talking, what I see the market doing tomorrow, where the market is at. Is it neutral? Is it bullish? Okay. What markets do you cover? The equities. Equities is what I'm covering. And the strategies are calls and puts. The strategies are theta trades or credit spreads or iron condors and weekly options. We look at the weekly options. And all this, TJ, is with options, absolutely. Thus the name, Options Infinity. Okay, just scrolling down here. Every night as a member, you would come in here and click on watch the video blog, which I put on by 5 o'clock Eastern time after the market is closed. And this basically is updating all our current trades and what I'm seeing for tomorrow. The other thing you can look at is the position list, and I've got all the positions that we're in and how we've been doing. Okay, and as a member, all you do is click on that, and the list comes up. These are all just the positions for the last 2 months, and the first thing you say, wow, you know, you took a hit on that one. I sure did, but the theta trades have been profitable for 7 months, and I allowed this one to go a little bit longer than I usually do. Most of them are controlled within about 20%. You can see that these are the trades, the stock, what I got into, what the entry price was, the date, what I got out, the exit price. These are displayed for you as a member, so you know exactly what I'm doing. Nothing's hidden. Nothing's hidden. You'll see that all the losses are controlled. If you tally these up in the last 2 months, we're up a little bit more than 300%. A little bit more than 300%. Okay. Now, if you wanted to go even further, I do live coaching, and this is once a week. We have a 1-hour webinar. But scrolling down to the free stuff, I want you to know all the strategies and what I do. And you can just listen to these for free. I want you to know, okay? Now, if you keep scrolling down, I even start out, if nobody even knows what an option is, here's a free course on what an option is. Option leverage, how I pick financially strong stocks. Setting up my charts on Thinkorswim. How big of a trade should I put on for my portfolio? The psychology of trading. I believe the psychology of trading is 50% of the trading. And you need to check your ego at the door and not fall in love with a trade. If it goes against you, get out. I talk about regression channels, Fibonacci's and measured moves, the macro MACD, which is a proprietary daily version of the weekly MACD I came up with, the money flow, the exponential moving average, and the Arun indicator. All this is free. All you have to do is click on this course. I want you to know what I do before you become a member. Okay? And then if you decide that this is for you and you like it and you want to look over my shoulder, you want to look over professional and watch what I am doing, it's only $49 a month. You can cancel at any time. And if you like it, you can join up as a free member. All you have to do is enter your name and your email, and you will become a free member and have access to all that. If you like all the material I have, you just go into upgrade to the Pro, 50% off for the first 30 days. It's only $24.99, $24.50. Or maybe even 20, well, something like that. I want you to hear me. I want you to watch me. I want you to see if this makes sense for you. If it doesn't make sense for you, no problem. It doesn't cost you anything. Come in as a free member, upgrade to a pro member, and then if you want my attention one-on-one, the weekly mentorship webinars are live. you can ask me questions. You can talk to me directly. I want to make sure that you fully understand what you're trading. Do you understand the system completely, and why did I do this, and does your trading have any loopholes in it that you want to talk through and work through? And that's what the live. So we have the three levels: free, pro, look over my shoulder, and live, have access directly to me. Okay, I think I finished a little early. If anybody has any questions in addition to what the people have put in here, let me just go back. I'll take some additional questions if you want to go ahead and type those in. Let's see. Wayne says, what would your success ratio on this be, and is it better on the longer term time frame or shorter time? Okay, that's an interesting question, Wayne, because I trade the weeklies about 10 days from expiration, and the charts I look at are the near term charts. I'm looking at the 15-minute charts. Okay. For directional options, calls and puts, I'll be looking at 30 to 60 days, and I'll be looking at the daily chart. Is the percent ratio as far as winners any different on all those? They're all excellent. They're all excellent. Now, let me couch that by saying, every trading strategy has losers. You have to test this, see if it makes sense for you, back test it if you want, watch what I'm doing, and then make sure you're not over trading, because let's say we've got a 65% win ratio. That means that you're going to have losers, not only losers, but you're going to have a losing string. And that's where money management comes into play. And I talk about all this on the website for free. Can you repeat the probabilities of the extensions? Okay. When you have a measured move, the probability is that it's about 80% going to go to the 127. About 70% to the 161, and about 50% to the 261. Of course, you're going to get more return the further out you go, and it makes sense that the probabilities are going to drop. Now remember, just like we're talking about, we're going to have losers, you got to remember the statistics and probability. The market doesn't know that. So be prepared to exit if the analysis looks good, if you've heard me talk about it, if you say, yep, I'm going to do that, and it goes against you, make sure you have an exit plan, not only for the profit, but for the loss. Wayne says, do you only use the Fibonacci's with the trend of the market? No, I like to use the regression channel. And but the Fibonacci's, I think, are really good as far as projecting forward where you think it's going to go. Okay, what's your favorite option strategy? My favorite option strategy is selling credit spreads. But I only do these on the big boys. I only do these on the RUT, Amazon, Google. It used to be Apple. Okay, because the nice thing about a bull put and a bear call is you don't have to be right, because you're putting on the trade below the price point. So with a bull put, you can make money if the market goes up, sideways, or down just a little bit, where that's not true if you just do calls and puts. But the thing is, on credit spreads, you must trade the big boys so you get enough credit to make it worthwhile. Okay, let's see. I am opening an account in options next week. Can I join you at that time? Absolutely. Absolutely. We're not going anywhere. Just remember www.optionsinfinity.com. You can join us at any time. At any time. And I see I'm getting the 2-minute remaining signal. I am complete. Thank you very much for your attention. Great questions, and I hope you all come in at least as a free member and just listen to what we have going on. Thank you very much.
Great. Thank
Bye-bye
you.
now.